Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for price to continue towards the upside in a wave C or a wave 3. In this scenario, we have a finished 5-wave impulsive structure to the upside in a wave 1 or A, a finished 3-wave move to the downside in a wave 2 or B, and now look for continuation to the upside in a 5-wave structure for a wave C or a wave 3. The common target area for your wave C is between the 1 and the 1.236 trend-based subextension, taken from the low to the high of 1 or A to the low of this 2 or B over here, giving you a target area between 69.1k and 71.3k. For a wave 3, we want to see strong continuation and volume increasing as well, as price then moves towards the upside, where usually a minimum target for a wave 3 is the 1.618 at 74.7k. Inside this structure to the upside, we are then looking for an impulse, a 1, 2, 3, 4, 5 wave move. And if we are looking for a wave 4 over here of the same degree as this wave 2, a wave C and then a wave A, B, C has a higher probability, because for a wave 3 we still need a very big extension towards the upside. Unless you're going to create a double 1, 2 and a wave 1, 2, 1, 2 and a move towards the upside, where preferably you are not going to hit this 1-to-1 trend-based subextension at 69.1k with the second wave 1 to the upside. By all means, we're looking for a 5-wave structure over here to the upside, taking the high over here at least once more at about 66.8k, and this is the same scenario as Max shared in Discord, where he had this chart over here looking for a wave 1, 2, 3, 4, 5 in his blue wave 1, corrective 2, and then a 3, flatten 4 and a 5 towards the upside. Common target area for your wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the low of 2 to the high of wave 3, giving you a target area between 65.3k and 63.8k. Invalidation would be price hitting this high over here, because overlap between a wave 1 and a wave 4 is not allowed in an impulsive structure. The best area of support in this box is the daily naked point of control at 64.8k. I do know that some other people that use exo charts, for example, or have a different tick size, might have their daily naked point of control at about 63.7k, which is right around the 0.5 Fibonacci. However, in my case, the daily naked point of control at 64.8k is the best area of support, and losing this over here would increase the probabilities to look towards the downside, potentially invalidating this impulsive structure to the upside. This then in turn increases the probabilities for the second bullish scenario here on my chart, where we again have a finished 5-wave impulsive structure to the upside in a wave A or 1, but an unfinished wave B or 2, where we're looking for a bigger 3-wave structure to the downside. The common target area for your wave 2 is between the golden pocket and the 786, which is between 60k and 58.4k, taken from the low to the high of wave 1. For a wave B, the 886 is also still a common target area at 57.5k. To the downside, we do have some additional support. We have the blue box here between 59.4k and 60k, and then another one between 57.9k and 58.3k. After wave B or 2, we're looking for continuation to the upside in a wave C or a wave 3. Preferably, your wave B or 2 is finishing before the 4 and especially the 5 Fib time, which would be very long for a wave B or 2 compared to wave A or 1. The vertical lines are Fib times taken from the low to the high of A or 1, comparing the length in time of A or 1 with the length in time of this wave B/wave 2, where the 4 Fib time is a Sunday, the 26th of May, 10 a.m. in the morning, Central European time. Inside this wave B or 2, we're then looking for a 3-wave corrective structure in an expanding flat, a 3-wave move to the downside in a wave A, 3-wave move to the upside in a wave B, where the most common target area for an expanding flat is between the 1.38 and a 1.236 Fibonacci, taken from the high to the low of A, giving you a target area between 66.7k and 67.6k, after which we then want to see an impulsive structure to the downside, price moving below the low of wave A here at 60.1k, hitting the target area for wave 2 or wave B, after which we then look for support and continuation to the upside. Inside wave B, we are then looking for a 3-wave structure to the upside, and most commonly wave B is a zigzag structure in an expanding flat, so therefore we're then looking for a 3-wave move to the upside in a wave A, B, and then a wave C to the upside. A common target for wave C still is the 1.618 trend base wave extension from the low to the high of A to the low of wave B, which has been hit and so far also respected. So we have to be aware that potentially the high of your C is in and you're going to move towards the downside, starting this wave C to lower prices, taking the low of wave A, which then also means that the move towards the upside, which was partly supported by news, will be retraced 100%, which is something that is quite common in the market. If you have a news event and price pumping up or moving down, that you retrace the full move to either the up or the downside 100%. So it is definitely something that I at least think about, especially if we lose the daily naked point of control at 64.8k, as that would increase the probabilities for price to move towards the downside. From a CVD perspective, there is locally not much going on. Price is moving down and so is the CVD, and all of the bullish CVD divergences that we had here already played out. The big bullish CVD divergence, higher low in price, lower low on the CVD, target was this high, has been taken, and all the bullish CVD divergences locally have played out as well with the move towards the upside. So at the moment we have to be patient, wait for a range to form and some new CVD divergences. If we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities at the moment are quite neutral, as we are at an important area on the chart for either an A, B, C or continuation in a 1, 2, 3, 4, 5, where the support, where price is at the moment, is going to play a very important role. If we do find support potentially at that daily naked point of control at 64.8k, the probabilities for an ABC are higher than an impulse to the upside, meaning a wave ABC corrective structure and then potentially another move towards the downside to take the lows instead of a wave 1, 2 and then a wave 3. The reason for this is because this wave 4 compared to this wave 2 came quite quickly. If we are thinking about a bigger wave 3, we actually want to see a 1, 2, a big wave 3 and then a 4 and a 5, right? But this wave 3 is then relatively shallow compared to what we actually want to see, unless we think about a double 1, 2 and a 1, 2, 1, 2 continuation to the upside. But at the moment, that is not something that we look for. On the 15-minute time frame, very locally, the probabilities of this morning played out because price moved towards the downside and we were looking for price to enter the target area for a potential wave 4, which is the 0.236 to the 0.5 area, which is where we are at the moment. We want to, however, see some proof of support. Whatever that is for you, can be a market structure change, bullish CVD, RSI, MACD, money flow indicator, candlestick patterns. It doesn't matter. Whatever gives you the confidence for price to move towards the upside. If we lose the daily naked point of control, it does increase the probabilities for price to move towards the downside. So I'm keeping an eye on it. Holding this support over here, and we're going to be looking for new highs in then a wave 5 towards the upside. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.